Welcome to this session entitled Mapping Ocean Finance for a New Decade, Sustainable Blue Economy. My name is Dennis Fritsch and I lead the Sustainable Blue Economy workstream at UNFI. Today, we want to speak about how financial institutions can drive more capital towards a sustainable approach to ocean-linked sectors and coastal resilience with a specific focus on Latin America and the Caribbean. We have a set of brilliant speakers for you to discuss this topic, who I want to welcome warmly to today's panel. Speaking about their work today are Melissa Garve, who is the Global Director of Ocean Protection at the Nature Conservancy, Valerio Raimundo Orlando, who is the co-founder and managing partner at Green Square Ventures, Ray Klein, Group Head of Investment Banking at the Republic Bank, and Milagros Rivasais, Chief for Advisory Solutions at IDB Invest. Starting off, and without taking too much time from our excellent speakers, I want to very briefly set the scene for today's session. We want to speak about the ocean and why its health is crucial for financial institutions and society. The ocean is the largest ecosystem on Earth. It covers over 70% of our planet and is home to 80% of all life. But not only that, the ocean regulates the global climate, acts as the largest natural carbon sink, and produces around half the oxygen we breathe. Seafood and other marine organisms provide the primary source of protein for almost 3 billion people, and coral reefs and mangrove forests act as natural barriers, protecting coastal communities from storms and floods. All the goods, services, and economic activities we derive from the ocean are estimated to be equivalent to the world's 7th largest economy in GDP terms. And this global economic output is reliant on a healthy ocean. Unfortunately, the second UN World Ocean Assessment, as well as the recently published IPCC climate report, show that the ocean is in a dire state. Human activities have already severely altered 2/3 of the marine environment, leading to a triple crisis concerning the climate, biodiversity and nature loss, as well as pollution and waste. In addition to being serious threats to nature and society, these crises also lead to economic losses which are often not considered. And these topics are very relevant right now for the activities of banks, insurers, and investors. One just has to look at the front pages of news outlets globally over the last few months, be it a sinking tanker off the pristine coast of Sri Lanka, plastic pollution, or a public outcry over illegal fishing fleets. Mismanaged marine industries and economic activities with a negative impact on the ocean are receiving ever more coverage and climb up the agenda of governments, financial institutions, and society as a whole. It becomes clear that business as usual is no longer an option. So there is a need for change in our approach to ocean assets, for a transition towards a sustainable way of managing ocean resources. And this is where the concept of the sustainable blue economy comes in, and the leverage financial institutions have who power ocean-linked industries take center stage. The sustainable economy acts as a sort of vision for any ocean-linked sector. There are traditional ocean-linked industries which are not very sustainable in their current state and which need financing to transition wherever possible. There are others which are already on the right track, however, they require support to scale sustainable business models. So this is not only an environmental challenge, it is also an economic opportunity. By building sustainable blue finance practices into their decision-making processes and by engaging with their clients on these issues, financial institutions have a unique opportunity to steer ocean industries towards sustainability. Therefore, UNFI is working with banks, insurers, and investors to mainstream sustainable finance practices supporting ocean health across the global finance industry. Crucially, we support the implementation of the Sustainable Blue Economy finance principles, which aim to direct the flow of capital towards activities which directly contribute to SDG 14, Life Below Water. They are the world's first global guiding framework to finance a sustainable blue economy, and crucially are aligned with existing principles and frameworks such as the principles for responsible banking, putting them into practice in an ocean context. Building on the momentum of these principles, and together with our more than 60 members, we have just released a first of its kind practical toolkit to consider finance for the sustainable blue economy. It helps financial decision makers discover how to avoid and mitigate environmental and social risks and impacts, as well as how to make the most of opportunities across 5 key ocean-linked sectors. This guidance provides a detailed breakdown of which activities to seek out as best practices, which client activities to challenge, and which activities to avoid financing completely due to their damaging nature and high risk. For more information, you can find this guidance to download for free on our website. On the ground, UNEP-FI is also involved in a joint project together with UNEP, UNDP, and FAO, taking place in Barbados, Grenada, and St. Vincent and the Grenadines, with the aim of developing blue economy financing strategies and creating a wider enabling framework for SDG investment. This project focuses on the identification of policy and regulation gaps, a methodology to identify key blue economy opportunities, and the definition of specific financing mechanisms for blue economy initiatives to achieve resilient growth. And here we are also working together with public actors, such as international financial institutions and multilateral development banks, who bring, among other things, policy expertise and strong partnerships with national government. It is really great to see that financial institutions and governments are finally waking up to the power they hold in moving ocean-linked industry towards sustainability. So let's move on to the panel discussion. And I'm happy to have such a level of expertise with me today. I think to kick things off, I would like to address the same question to all of you. Essentially, it would be super to hear from each of you why the blue economy is important for your respective organizations. And also, maybe you could add a little bit of color by giving our audience an example of a blue economy related project that you are involved in. Why don't we start off with Melissa initially?
Great. Well, thank you, Dennis. I really appreciate the opportunity to engage with all of the fantastic participants in this panel. I want to start to answer your question about why the blue economy matters. I do want to introduce the organization that I represent, the Nature Conservancy. So our mission is to conserve the lands and waters on which all life depends. And so we work to meet this ambitious goal by focusing at the intersection of biodiversity protection and climate change. And we work in 72 countries and territories around the world, on 6 continents, and in every US coastal state and territory. We're very engaged in the Caribbean as well as Latin America. And our ocean projects as well, they span the globe too, from the South Pacific to the Caribbean to the Western Indian Ocean. We protect ocean habitats by developing and applying good ideas locally that can be adapted and then brought to scale in other places. Our strength comes from combining the on-the-ground connections and relationships that we have with communities and governments and stakeholders, with our expertise in science and policy and finance. So when you ask us, why the blue economy is important to us, you listed all of the key things that we always point to. The ocean is 90% of the inhabitable space on the planet, and it does provide that 50% of the oxygen that we all breathe. It's home to fisheries that provide food and income for more than 500 million people. And I think you highlighted the protective value and the benefit that coral reefs and oyster beds, they provide for people, but they also support the fish populations. They clean our waters, and they help provide support for the tourism, and they protect us by reducing wave energy and storm damage as well. Meanwhile, when we think about the benefits of the coastal wetlands, how they provide protection from flooding, but they also help store that carbon more efficiently than even rainforests. So there's so much value to the oceans, but we also know that the world is changing fast. And over the next 30 to 40 years, development pressures, they will increase dramatically to meet the growing demand for food and energy and water for 9 billion people. And this means increased pressure on oceans. And meanwhile, our climate is also changing fast, and it's leading to more intense storms. It's leading to higher sea levels, increased flooding, and ocean warming. Coastal wetlands as well are under intense threat, and we're losing them faster than any other system. With half the world's population living on or near coastlines, threats to our oceans impact our food, our livelihoods, as well as our safety. We all know that we need to act now, and we must be protecting our oceans while meeting the demands for food and jobs. And we have to be safeguarding coastal populations while reducing the risks of climate change. From the Nature Conservancy's perspective, building that sustainable blue economy is essential for our future. And so we've been engaging in creating innovative solutions for the blue economy by relying on what we already know works, and that is creating scalable approaches that we have tested on the ground and using relationships that we've built over decades and a strong connection to the communities that we partner with to get conservation done. So I'm going to give three very quick examples of some of the things that we've been doing in this space and some of the intersections in blue economy. The first one's in fisheries, but the portfolio that we have, I want to highlight, it really does span tourism and fisheries and aquaculture, things like reef resilience, blue carbon, and large-scale debt finance strategies. But to give my first example, I want to highlight something that we're doing in the Pacific, which I know is not the region that we're talking with here, but I think this is an idea that may be potentially replicable. What we did was we recognized that the waters of the Western and the Central Pacific Ocean, they produce about 60% of the world's tuna, and it's a haul of nearly 3 million metric tons, and it's worth almost $7 billion each year. But some of the same pressures that we see in other places, like overfishing and illegal fishing activities, it threatens to disrupt the global seafood supply, and it also decimates island economies that rely heavily on the revenues from tuna. So what we've done is take a really big step towards transforming the existing tuna supply chain by creating a new vertically integrated, sustainable end-to-end tuna supply chain company called Pacific Island Tuna Provisions. And the goal of this initiative is to both reduce the bycatch of juvenile tuna and at-risk species, and to create a sustainable funding source for community-based conservation projects within the region. And so this is a Republic of Marshall Islands-based company, and the goal of the Pacific Island Tuna is to ensure that the Pacific Island countries have direct ownership of their tuna catch from the dock to the retailers, and that a portion of net income flows to community-based conservation projects. To be effective, we're partnering directly with local governments and communities to embed rules into vessel contracts to drive sustainable fishing practices and provide retailers with unparalleled levels of visibility in exchange for long-term, mutually beneficial supply contracts. And as I mentioned, while this approach is centered in the Pacific, we think it's something that could be replicated in other places and other fisheries. Now, I want to give an example of something that lands much closer to this region, and that's the effort that we've done creating Reef Insurance. So you might wonder, what in the world do the words reef and insurance have to do with each other? And what we have done is we've been able to create insurance mechanisms to protect the coral reefs that protect us. And it works like this. Recognizing the economic benefits of healthy coral reefs to the tourism industry, and also being able to quantify the protective value that coral reefs provide in reducing the power of storm waves by about 97%, we've been able to partner with the insurance industry to create the first of its kind insurance product that protects coral reefs, and it pays out funding to restore reefs if they're damaged by hurricane-force winds. Now, a policy was put in place in Cancun, Mexico last year, and it ended up actually being triggered by Hurricane Delta in 2020. And it was able to provide resources to restore reefs and do it quickly. What we've learned is simply that it works. But aside from the work that we're doing with the insurance industry and in fisheries, I want to highlight what is by far the largest program that we have to be supporting sustainable blue economies. And that's what we call our Blue Bonds program. And this is the way that it works. The Nature Conservancy partners with governments to address what is the single greatest challenge to protecting the marine resources that are essential for the planet and for the well-being of the people who depend on them. And that's funding. Governments need funding today to meet current needs, as well as to invest in the marine protection for the future. And I think as we've all seen, the pandemic and the ensuing financial crisis have made these needs ever more stark. The approach that we use is enormous in scale, but it's really simple in concept. In support of commitments to protect 30% of a country's exclusive economic zone, we partner with governments to create conservation trust funds, to restructure debt or issue new debt that can generate resources that support marine protection today, and also create endowments to ensure that there are sustainable financial resources long into the future. Now, this can include not just ensuring that there's fiscal space to pay for implementation of new protected areas, but it can also support things like investments in fisheries management and investments in blue economy initiatives. The Nature Conservancy's role in these projects is to negotiate and structure the transaction, to set up the trust fund, and then bring in the science to facilitate stakeholder-driven marine spatial planning process that creates the marine protected areas. We piloted this effort in the Seychelles, which was really, a test bed for this entire concept. And in 2016, the Republic of Seychelles worked with the Nature Conservancy to restructure part of its national debt, and it now is freeing up over $400,000 each year for marine conservation. And as of 2020, the government's protected over 400,000 square kilometers of ocean. So that's an area that's twice the size of Great Britain, and we've been able to bring marine protection to 30% of the exclusive economic zone and territorial sea. So this had a massive footprint. We took what we learned in the Seychelles and we've expanded that. We now have a pipeline of projects that are now underway in Latin America and the Caribbean, as well as in Africa and the Indian Ocean. The goal of this project is to unlock $1.6 billion in support of marine conservation and protect 4 million square kilometers of ocean, while also benefiting the 43 million people that live in some of these coastal zones. So these are just a few examples. I'm going to now move on and let someone else have the microphone here. But I just want to highlight that, these types of innovative blue economy solutions, they really are essential to be building the healthy and resilient oceans that support the thriving communities across the globe and what we're seeing is this rapidly changing world.
Thanks so much, Melissa, for sharing such really practical examples of on-the-ground work that you're doing. I think this is really interesting for our audience today, especially. Let me move on to Valeria. Where do you fit in this blue economy world? And I know that you also wanted to specifically cover some of the challenges of the sustainable economy that you have come across. So please, the floor is yours.
Thank you, Dennis. And it is definitely a privilege and an honor to be part of this panel and with such distinguished speakers. What we do at Green Square is we structure fixed income securities that are aligned to SDGs and especially to sustainable blue principles and guidelines. So we're definitely very active in finding more ways of aligning traditional bonds and traditional securities to sustainability. And how we do that is to start mainstreaming how we actually think of blue. So one of the things for us is that blue is crucial. And it's crucial to stop climate change as an adaptation and mitigation tool. The IPCC report just disclosed that we have few years, not 30, not 20, but 10, until things are going to be quite seriously different. And we're looking at what that means in terms of challenges. So for marine biodiversity, we know that whatever we structure would require security to be about 10 to 12 years. Not all investors are aligned in this. So what we do, and I'm going straight into the nuts and bolts so that we can talk about the hurdles that we've experienced in the last few years, is really mainstreaming. So how do we put blue in absolutely every single framework that we design for a sustainable bond, whether it's a green bond, whether it's a sustainable bond, or even whether it's a social bond? And the examples are from water and sanitation to looking at renewable energy in the ocean or in riverbeds, anything that affects marine and also the marine biodiversity. So we really strive to bring in blue, mainstream blue, so that the investors are not looking at this as a niche investment. And we want to do so, not just replicable and scalable. We really want to do this in sovereign bonds and in corporate bonds and in local municipal bonds. So what are we actively doing? We designed the first coastal resilience bond with ORA, the Ocean Risk and Resilience Alliance. And it was an initial corporate bond for hospitality groups. It was supposed to be launched last year. Unfortunately, COVID disrupted those plans by creating a small problem for tourism going forward, but changing that. And what has happened is that tourism and hospitality groups have really truly taken this year of COVID and almost a pause to start looking at more sustainability measures. So coastal resilience looks at how to transition brown and gray infrastructure into green and blue infrastructure with a substantial blue framework, even though it's not called a blue bond. It's really focused on transitioning. How do you transition jetties? How do you restore mangroves? How do you protect coral reefs on your coastal? How do you benefit that, and how does it produce a financial return? So we are completely focused at Green Square in making sure that natural impact is also aligned to financial returns, because only natural impact is not going to get us the investors that we need to truly become transformative within the blue economy. So we're focusing on mainstreaming, how to use this, and we were faced with sovereigns approaching us and asking, how can we do a coastal resilience fund? So then we're looking at flooding, we're looking at electrification of the shipping vessels, we're looking at also electrification of ports, building sustainable ports. So we're doing this with we're starting this conversation with a number of Caribbean islands, and also with a number of South American countries. So we're very excited, but one of the hurdles is time. And I think the IPCC report was quite proactive at saying time is not on our side, and we need to start really looking at how long it takes us to make these deals. So what are the hurdles? The hurdles are not insurmountable. So we'll start with the positive. The largest constraint that we have is obviously climate degradation, global warming, and also how slow it is to get issuers, sovereigns, municipal, and corporates to look at transition, and how slow it's taking for us to transition from brown and gray infrastructure to green. But time is of essence. And traditionally, decision made by decision maker at the political level have been very slow. And I'm sure Melissa also agrees that unfortunately, when in order to structure a bond, it takes 1 or 2 years, that time is of essence. We need to become faster at producing structured product or investment products for investors to be able to bring the money to the blue economy. Another aspect is where we have in the Caribbean, a lot of the ruling political parties prefer a more conservative and traditional approach to creating demand for investors, something that they've seen and they've done before. And so they shy away from innovative projects because their electorate really matters and they want to show results, and they know how to show results in the past. So we are looking at how to have these conversations on building resilience and sustainability. So this approach needs to be changed, since Dennis asked me to look at a bit more further about the hurdles. Another hurdle for the Caribbean islands and some of the South American countries is investment size and duration. There's definitely a mismatch between what can be done and what is needed to be done and the investor strategy in the blue economy. So demand is high. Supply is very short. And the supply of good blue is actually mostly in emerging economies. And we're looking at emerging markets, we're looking at frontier markets, where climate and biodiversity today and degradation is a substantial component of this risk. And then we're also looking, especially with the Caribbean, at a Caribbean premium. What I'm talking about Caribbean premium is a risk metric that is applied by all investors when they are looking at the Caribbean, and it's a huge hurdle because it's a hurdle in attracting good investment at reasonable, and let me stress this, Western market rates. Not emerging economy rates, but let's bring investors who want to invest as if they were investing in Europe, or they were investing in North America, or they were investing in a triple rated sovereign in emerging markets. What we're not looking at is the risks. The risks are obvious. We have, the Caribbeans have natural climate and biodiversity risks that are mounting. And in the next 10 years, they will become even bigger. But as Melissa also just mentioned, we can mitigate these risks by implementing structural changes to the perception risk, but also bringing in investors that are willing to take in junior shares, because I don't want to talk about loss. I don't want to talk about first loss. That is something of the past. Let's talk about how do you invest in a mindset that is changing. I want to go on to this very fast, and then I'm happy to take this on later with the other panelists. But I want to look at the positive. Impact in the Caribbean and in South America on the blue can actually be measured. And transformation is immediate. You can start seeing positive impact when you're creating transition to blue within a year to 2 years. Fisheries might recover in 5 to 7 to 12 years, but when you're starting to transition ports, jetties, sanitation, when you're starting to change the quality of the water, you will see a metric that is also climate related. Investors want climate related metrics today. It's something that is tradable. It's something that is marketable. So we want to focus on that. But let's think about, and this is my challenge today to the entire panel, is what if we think of investing in the Caribbean as investing in an early stage Silicon Valley startup? We might start changing that mindset about investing in blue in the Caribbean. What I mean is a Silicon Valley startup, within a year, 90% of the startups will fail. And within the first 2 years, that 10% remaining, 70% of them will fail. But you have a huge rush of venture capitalists and angel investors looking for that impact, looking for that return. So we might not be able to promise or to create the same type of influx of returns that a Google or a Facebook type of startup will give the venture capitalists, but we definitely can actually provide that return and impact and also in carbon credits. The ocean is an enormous carbon sink that will change the way that we see climate. So we need to start changing the mindset. And with that, I'm going to leave it, and I'm happy to take it on a bit later. Thank you.
Thanks so much, Valeria. Not to like the framing the framing spin that you put on this. Ray, is that something that chimes with you on the ground in your day-to-day work? What's the Republic Bank's view on the blue economy, and also maybe what role do you think the blue economy can play in creating local resilience?
Yeah. Well, again, thank you, Dennis, for the opportunity to come here and speak. Valeria, I was kind of blown away by some of the things that you're saying. For us as an organization, we're headquarters in the Caribbean, so our subsistence is based out of the Caribbean, but the oceans and the seas can also represent a significant threat to us. Almost on an annual basis, our island states are, potentially at risk for damage by hurricanes. So on one side, we exist because of the waters. On the other side, it could be something, in terms of life and death. So for us, it's not, it's just some theoretical exercise. We live in these island states. It represents for us, when we look at our credit portfolio, our loan book, a significant risk, much more so than, the risk of wars, the risk of, financial crisis. The environment represents, or climate, I should say, represents a meaningful portfolio risk for us. So one of the things, our executive team, in thinking about, the resiliency of our bank, the long-term viability of our bank has been around for 180 plus years. So if we're thinking about the next 180 years, we have to start addressing some of these portfolio risks that we see. So it was with that in mind that in September of 2020, we signed on to the Principles for Responsible Banking. Since that time, our organization, which to date, we are the only Caribbean organization that signed on to that commitment, but we also were part of the founding signatories for the Net Zero Banking Alliance that was recently announced with 43 other global banks, much more systemic than we are. But we are a leader in this space. We're the largest financial group in the Caribbean, and we believe that actually we could push the boundaries on this. We can force a lot of the regulators to start thinking about this in terms of how we lend, and we could potentially, I would say, influence a lot of our existing peer banks to really start thinking about this as well, because our stakeholders are pushing us in this direction. Going back to your point about, what we've been doing in the space. So since us signing on to the commitment for Principles for Responsible Banking, we announced a climate finance goal in June of this year, where we're looking to invest, lend, facilitate up to $200 million in the Caribbean. May sound, in terms of the global landscape, not a massive number, but when you think about the Caribbean economies and their GDPs, it's quite meaningful in the Caribbean context. And what that climate finance goal is intended to do is to really spur activities in not only the green space, but also the blue space. So things around, sustainable tourism, for example. Many of our islands suffer from really highly dependent on tourism, and they do suffer from degradation of the coastal sea lines. How do we reinforce some of that? How do we make tourism not just white sand, blue beaches type of an experience? How do we actually show the rest of the world a much more sustainable experience? And then obviously one of the things that's quite unique to our group is that even though you're in the Caribbean, we are, a large segment of our actual territories are based on oil and gas. So for example, right now in Guyana and Suriname, it's kind of the hottest place to be in terms of offshore drilling. They've continued to, I think the count now is up to like 20 finds in Guyana, probably 6 in Suriname. So, how do we actually think about that segment of our economy in a much more responsible way? Not necessarily that we can completely take it out, but we have to think about it in a responsible way. So what are the elements of financing that sector that we're going to do a little bit more responsibly? So that's how we've been playing in that space. I can give you some examples as the projects that we have done in the blue space, maybe a little later on in the panel, but I'll just kind of hand it over to the rest of my peers to kind of go through.
Thanks so much, Ray. And yeah, it's great to share that kind of on the ground experience that you're having in the Caribbean. And I think you and then also Valeria mentioned something very important, I think, and also we've seen with Melissa's points that there are kind of two things that need to be done. On the one hand, you need new financial instruments and approaches that are innovative because this is really a new space. But also on the other hand, you have to start integrating blue practices into already existing plain vanilla instruments and approaches to really kind of move the needle on this topic. And that brings me kind of nicely to our last panelist today, Milagros. It would be great if you could share a bit about where you sit within this conversation and also some projects that you've been involved in, and maybe also with a specific view around the Caribbean and Latin America and how financial institutions there can really start unlocking some of the finance for blue economy.
Thank you very much, Denise. It's really a pleasure for me to participate in this panel. First of all, I would like to introduce my organization. Is IDB Invest, that is the private arm of the Inter-American Development Bank. At IDB Invest, we are committed to work with the region's private sector to address the world's most pressing development issues by investing and providing non-financial support to foster economic growth, sustainable environment, and social inclusion, both in land and in water. Latin America and the Caribbean is an attractive region in many ways. It has a unique combination of high yields, a higher risk perception, significant capital needs, and a social context that allow for more involvement of climate change and diversity action. Our goal is to become the lead catalyzer to bring those investments to the Latin American and the Caribbean region through innovative instruments and by leveraging the power of being part of the IDB group. IDB Invest has supported about 30% of all social, sustainable, and green bonds by the private sector in Latin America. As you all know, the blue economy encompasses the sustainable use of ocean resources for economic growth and development, as well as ocean ecosystem. To this end, we see blue economy as the sustainable use of ocean resources and fresh waters that triggers economic growth, improves livelihoods and jobs, as well as ocean ecosystem. Blue economy contributes to all 17 SDGs and also to Paris Agreement by financing attractive ocean and water-related solutions across numerous sectors. Blue economy can fight climate change through nature-based solutions, provide food, foster low carbon transportation, and unleash almost unlimited renewable energy. This economy, we estimate that is valued as $3 trillion per year. Some examples of the activities that the IDB is doing are the following. The first one is ShellCat, that is an innovative program that is supported by the IDB group that is using new technology to develop advanced fish counts to reduce uncertainty by linking fishermen with customers directly, increasing the traceability, reducing the need to overfish, and increasing incomes by 50% while reducing the cost to consumer by 30%. In Honduras, IDB is piloting its first loss guarantee fund, where local banks are increasing the flow of working capital to fishermen who are members of cooperatives and agree to fish sustainably while restoring and preserving the forests. While green and other sustainable debt instrument concepts are rapidly expanding, blue debt instruments, bonds, especially bonds, are still at the nascent phase, as some of our colleagues have already mentioned, where there is an increasing demand for commonly agreed references and guidelines to structure and measure it. We see the need for a specific blue label as an effective way to earmark and channel financing to oceanic health and water-related issues. There is an important blue bond characteristic to keep in mind. Despite they are related to oceanic health, much of the operation and inputs needed to enable them come from improved practices of land-based businesses. Some examples include consumer packaged goods designed for waste reduction, inverse logistics, for example, recycling, SME sustainable practices to increase value chain resilience, and agribusiness reduction of agrochemical runs. The Caribbean region presents particularly a clearly business opportunity for the blue economy. Aiming to lead the analysis about this financial market product for the region, IDB Invest has collaborated with the UN Global Compact in developing the Blue Bonds reference paper customized for the Latin American and the Caribbean. Securing oceanic health and investing in water-related issues will play a key role in meeting the goals of the Paris Agreement and will help adapt to the impact of climate change. Finally, it is an opportunity to build better back with great potential to bring greater effectiveness and to make an impact in region's blue economy while mobilizing private capital to advance this path forward in a more sustainable, resilient, and inclusive way.
Super. Thanks very much, Milagros, for that. What I think has come through in all of your contributions today is that it's not really just achieving a sustainable blue economy is not just a task for the private sector. It's also a task for the public sector. And I know that some of you work a lot with public-private partnerships on the ground. And so I would like to pose one question again to all of you, starting with Melissa. What do you think in terms of kind of systemic changes that are needed? What are they, and what is the role of financial institutions as well as governments in these changes that are needed?
Dennis, the work that we do as a nonprofit is really at the intersection of all of these different efforts: the private, the public, the nonprofit world. And what I'll say is the main challenges that I experience is really just having that seed funding to build the foundation for what are really truly scalable projects that can meet the needs that the world is throwing at us at this time and that the oceans are facing. So what I see is that we need stronger data for decision making. What are the true costs of implementing marine protection and resilience efforts, but also what are the long-term benefits? And I think sometimes we see that maybe on a one-off situations, but what's missing right now is having there be more of a global framework to be able to understand some of these issues. And so, we need to know this information so that we can best be selecting the best approaches to bridge into that sustainable future. We need to know what are the costs today to get us into those future benefits. We need to be able to think about, how we can develop investments that can be truly fully mainstreamed into the private sector. And so, as the climate heats and the marine resources are put under greater pressure, it's essential to be solving these challenges for us and the livelihoods and well-being of future generations. And I'll be a little honest, I'm kind of skeptical about impact investment, because what I've seen over the past, decade and a half working in this space is that while investors, they want to see impact, but they also want to have standard returns. And in many cases, you can't blame them. And sometimes that does exist. Occasionally that's possible. But typically what I've experienced is that it's really difficult to fund some of the underlying science, the data, the planning, and the relationship building that's needed to build what are really replicable models that can scale to address the size of the challenges that are in front of us. And so, again, my experience is being at the intersection of this space. And this is where nonprofits can have a role as a partner with the private sector and with governments, because we can help provide some of that foundational work, some of that science, some of that data collection, and even things like marine planning that just seem to fall through the cracks. And, for any other investable opportunity. And so, we can test those science-driven approaches with partners on the ground. We can scale them up and then spin them off into the private sector. Because at the end of the day, we want to see a world where the private sector cares as much about biodiversity and climate change as we do. And we and our philanthropic supporters are really eager to put in the resources to help the world make that shift, because we're in this transition space at this point. And so, what I see as a real opportunity is to be building the right partnerships between the public, the private, and the nonprofit institutions. It's essential in my mind. And, I think we need to be really supporting these radical partnerships, both within and among our various sectors, to be able to make that happen.
I couldn't agree with you more. Valeria, you have already spoken about some of the issues, but also some of the solutions. If you'd had a wish to either peers or governments of that would support, the sustainable blue economy to be mainstreamed across the board, what would that be?
My first cry is speed. We need to move faster. Products need to come to market faster. We need due diligence processes to accept investing in blue and mainstreaming that set of investment. And I do believe that the blue guidelines and the sustainable blue financing principles are essential in order to achieve that. They really do give a clear guideline for financial institutions, but also for issuers. And let's not forget, the issuers are the ones that are borrowing in the case of a fixed income product, or the ones who are providing equity, they're sharing on their profits. So those types of investments are definitely key. I do believe that conservation finance has a role. Not-for-profits have a very important role into doing and taking on the science part that is a lot harder to prove sometimes, that has a financial return within the times that markets are expecting financial returns. But I think that we need to structure products in aggregation. We need to support Caribbean islands and Republic Bank, for example, in making sure that we can have something that shows volume, that shows a good size, good credit, where we diminish the risk, where we make it enticing for junior partners to come in, because it is a good investment, where the risks are no different, again, than investing in an early stage startup in Silicon Valley. Actually, you have greater returns. The other thing is we have to showcase exposure to the upside. and a clear liquidity scenario, a clear exit strategy. Without that, we will not bring new investors to the table. And unfortunately, we need money. And grants are not going to suffice to really be strategically transformative. But there is great opportunity in transformation of ports. There are refineries, for example, in Curaçao that hasn't been used that can be transformed. There are ports that are essential for the economics of those islands, but can be also used as a blueprint on what a sustainable blue port can actually do globally. So I think that the Caribbean islands today have an opportunity to really showcase that they can take the lead in the blue economy and they can attract investors. The investors are there. We work right in the middle. We are intermediaries between institutional investors and the issuers. And what we try to do is we try to structure these products. So I do strongly believe that there is opportunity, but speed is what I highly hope for. We need to move faster. It's 10 years only.
Thanks very much, Valeria. That's certainly true. Speed is of the essence. Ray, I would pose the same question to you. If you'd have one wish to either your peers within the Caribbean or all governments, what would that be?
Maybe a couple. So definitely the regulatory space to be a little bit more accommodating of this type of lending, this type of investment. Ultimately, it's hand in glove to, I think, what Valeria is mentioning. Definitely governments to figure out how they can stimulate activity in this space. Ultimately, if we do things like tax breaks and we try to, we soup up the returns, you're going to find capital coming into this space. I'm kind of on Melissa's side when she says she's a little bit skeptical of investors that want impact, but then they want returns as well. They want normalized returns. I think the governments can actually play a very important role in making sure that some of those incentives go to the guys that are taking risks, so that we do see a flight of capital kind of coming into this space. And of course, our organization is happy to kind of be there, supporting any kind of lending piece of that. But absolutely, the regulators and really stakeholders in the government really could push or really drive activity in this space, at least specific to the Caribbean.
Super. Thanks very much, Ray. Milagros, you're last, but certainly not least. What would be your wish?
Thank you very much. I think I have like two wishes. One is the development of frameworks for creating the enabling environment for blue bonds, and the second one is the risking, and I will explain you why. Financial institutions have a pivotal role in providing financial and non-financial solutions to the blue economy. But scaling the market will require a blue bond recognition, developing benchmark around issuance size and terms, blue pipeline development, government and large corporate involvement, and a strong reporting. Create blue investment opportunity by increasing the recognition of the vital role of the ocean in sustainable development is key. And this is something that needs to be recognized, and we need to create awareness around. Collaborate with governments and multilateral development banks can help a lot. Public-private partnership will be particularly relevant given the smaller size of many companies in Latin America and the Caribbean, especially in the Caribbean region. So the establishment of a fund or a vehicle that can support numerous smaller transactions may also defray transaction costs on a per dollar basis. Government issuances, along with benchmark corporate issuances, will be important as well in building the market and quickly setting the stage for smaller markets, for the smaller market players to enter. I think that the IDB group can have an active support and can contribute to building block to kickstart the market and create investor confidence in blue debt instruments such as blue bonds that we have been talking about. IDB Invest can support in many ways. First one is at the macro level. where we can engage with national and regional development institutions to create a common understanding of the blue economy and incentivize the construction of blue projects. As an investor, IDB can use its influence to encourage lenders to originate loans for blue business at the local level. We can also support local banks to go to market with blue bonds of our own, and we can purchase a partial or total portion of the issuance of the public or private debt securities. In addition, IDB Invest can provide partial or total credit guarantees that improve the risk profile of debt instruments or create alternative structures to mobilize institutional investors like the bonds. I think that having de-risking mechanisms like blended finance and another one at a higher scale is extremely important to really ramp up in the development of this blue economy. Mobilizing other investors is also critical, but we need to take into account that we need a specific de-risking instruments to address the risk associated to emerging markets, the risk associated to climate change, and the risk associated to a certainly unknown blue economy. IDB Invest can also provide advisory services on that and support clients on this. So my request, as I told you, is the development of the blue bonds and the risking mechanisms.
Super. Thanks very much, Milagros, for that contribution. And I think it's really encouraging to see the excitement that we see within this space and also on this panel today. And unfortunately, we have run out of time. So I would really like to thank our speakers and anyone tuning in today. And want to really finish by highlighting that financial institutions and governments can act as enablers of change by using their expertise in finding opportunities and understanding of risk. We really do have a symbiotic relationship with the ocean. To solve the climate, biodiversity, and pollution crises, a healthy ocean is our main ally. So I encourage anyone in the audience today to evaluate their organization's impact on the marine environment and to urgently show leadership on this topic of the sustainable blue economy. If you want to learn more or get involved in our work, we're starting work on guidance version 2 for financial institutions this year, looking at waste management and coastal resilience and defense in particular. So if you're interested to get involved, please do reach out. Thank you very much for tuning in.